the cash flow, the equity, the tax incentives. These are the nerdy, nuts and bolts, spreadsheet friendly reasons to invest in 2 to 4 unit multifamily buildings, whether here in my home market of Chicago or anywhere else that these types of buildings are found. And there are plenty of places that you can go on the internet to explore these very great reasons in more detail, including some of my other videos. But to dig down one level deeper, here are what I would consider to be the top 3 real reasons to invest in small multifamily buildings here in Chicago or anywhere else that they're found. I'm going to go in reverse order. So I'm going to go with the number 1 reason first. The number 1 reason to invest in 2 to 4 unit buildings, whether in Chicago or in any other market, is that it gives you the best chance to compete against the modern housing market. I don't think I need to tell you that the rhythms and cycles of being a homeowner in America are vastly different than they were just a few years ago. And it's a whole different side of the cosmos from where it was when our parents and our grandparents were entering adulthood and their home buying years. There's lots of factors at play here, behavior trends, domestic migration patterns, other kinds of demographic shifts, but perhaps the biggest can be summed up in one chart. And this is honestly one of the most depressing charts that you can look at about the current state of the US economy. So the blue line that we're looking at is both of these, this chart is going back to the mid 80s. And the blue line that we're looking at here that's going just straight up and to the right in a very dramatic fashion is the median sales price of homes in the United States. The red line that you see creeping along the bottom, not really having any kind of growth or movement at all, is the median household income of the United States. So you can see back when this chart started in the mid 80s, the average income was about 3/4 or so of the median sales price of a home in America. Today, it's less than 20%. So if you can read charts at all, you now know that the price of housing has skyrocketed relative to income levels in America. The once standard cycle of buying your starter home with your first job right out of school and casually trading your way up the housing totem pole, it's still possible, but it is exceedingly more difficult to pull off. The deck is getting more and more stacked against potential homeowners, and the barrier to entry for the housing market is growing exponentially. So here's the good part. Here's the punchline. Investing in 2 to 4 unit multifamily properties as an owner-occupant can be the way out of this. It's the best way I know to fight back against the all-out oppression of this chart and everything that makes this chart what it is. Here's why. Current lending programs let you buy these properties for as little as 3.5% down. You can use the building's future rent revenue to qualify you for more property. You can be a fair and reasonable housing provider while the rent revenue that you receive pays your mortgage for you and builds your equity and your net worth on autopilot. This frees up resources that would otherwise go towards rent or HOA fees or something like that, and instead allows you to pour those resources into your next investment property and naturally build a sizable portfolio in relatively little time just out of the properties that you're buying to live in anyway. In short, it's simply the best way I know to defy the downright conspiratorial nature of the housing market today and literally or proverbially put your middle finger up to these numbers that are pricing everyone out and allow you to say, watch me do it anyway. The number 2 reason I have is that it gets you off the housing hamster wheel. Most of your peers are going to stick to the traditional ways of doing things that were ingrained in them by their parents or family or friends or society at large. This aforementioned cycle of basically save up money, buy a starter condo or a single family home, trade up or down a few times throughout your life, make a few thousand mortgage payments, and then die. Despite what we just learned about how much harder it is to do that now, that's still the route that the vast majority of people are going to be comfortable with and have the vision for. And it's important to note there's nothing really wrong with this, right? I mean, primary residences can equate to great sources of wealth for people who are able to actually get into these houses. And everyone has different interests and risk tolerance profiles, and on the list goes, at different strokes for different folks. But what if you were one of the few who was able to see things a little differently? To break this cycle for yourself and turn your real estate ventures into something that are all the way over in the asset column and never feel like just another bill or another liability. To naturally create a little mini empire that in time can supplement or even replace your income and give you that ever so elusive financial freedom that everyone always talks about so much. This takes me to my third reason to invest in 2 to 4 unit multifamily properties, which is that it gives you an opportunity to scratch your entrepreneurial itch. In most cases, in my experience, the people buying these types of properties aren't yet full-time professional investors. Instead, they tend to be normal people holding down a decent day job, probably a W-2 job, who have managed to stash a little cash and at least mostly pay their bills on time. This won't be true of everyone, of course, nor should it be, but for a good percentage of people who fit that description, that reliable day job just won't quite quench the thirst you may have to build something for yourself, to take a more active role in your own life and your own finances, and take a route that might be a little riskier and certainly less comfortable, but also potentially more rewarding and character building. And while there are tons of options for different activities to explore filling this entrepreneurial need, the simple truth is that, especially over time, as long as you're mostly sticking to the fundamentals, nothing beats the power of multifamily real estate investing. And even though I've done three, I'll throw a bonus reason here at the end. This bonus reason, maybe call it the fourth reason, whatever you want, is that you can be one of the good ones. Everyone has a crappy landlord story across all genres and time frames of art and culture. The image of the mean, greedy landlord is a trope that is almost always guaranteed to resonate with just about everyone. Everyone seems to have at least one bad landlord story. Luckily, in my experience, most landlords or housing providers really aren't that way, but even if they were, you can go in and be the kind of fair, responsive housing provider you would have wanted for yourself, or hire a management company to make sure that they do it. I hope you enjoyed this and got something out of it. My name is Jake Lyons, real estate advisor in the Chicago area with App Properties and Christie's International. If you want to learn more about small multifamily investing in the Chicago area, please visit mychicagomultifam.com, where I offer a myriad of resources, including daily property analysis newsletters, education, city-specific calculators, and much, much more.